What if the listing price you choose on day one is actually the biggest financial decision of your entire sale? Because right now in this market, it is. I'm Teresa, and in today's March 2026 market update, I'm covering February's data across the GTA, Dufferin County, and Orangeville, plus a heads up segment on 2026 trends quietly reshaping what buyers and sellers should do next. Stay with me because one of them catches a lot of people off guard. So if you're looking to make your next move, whether it's to Orangeville, Dufferin County, or the surrounding area, people just like you reach out to me every single week to help them with their next move. And I would love to have a private conversation with you to see how I can help you make the right decisions, avoid costly mistakes, and properly guide you through the process. Click on the link in the description below to set up a time. Now let's get into this episode. Here's the one-line summary before we dig in. Negotiation is normal again. Quality homes are still moving. And if you're paying attention to the right signals, this market actually rewards you. But there's a catch. New listings in the GTA are trending down, which sounds like good news for sellers, and in some ways it is. But there's a condo story developing in 2026 that buyers, sellers, and investors all need to understand before making their next move. We'll get into that in a minute. Let's set the stage. The Toronto Regional Real Estate Board recorded 3,868 sales and 10,705 new listings in February, both down from last year. But here's the detail people miss. Listings dropped more than sales. So despite a slower market, supply isn't actually building in the way you might expect. The average price came in at $1,008,968,000. Homes are sitting on the market at about 36 days on average, and sale to list is running at around 97%. Buyers have negotiating room, but well-priced, well-presented homes are still selling. The gap between a home that's well-positioned and one that isn't is all showing up in the data. Okay, this is the segment that I mentioned at the top, and this one matters even if you're buying or selling in Orangeville or Dufferin County, not Toronto. The Bank of Canada has flagged the Toronto condos are no longer delivering strong short-term returns for investors. Rates are higher, demand has cooled, and the math just doesn't work the way it did a few years ago. On top of that, CMHC has raised concerns about condo pre-sales collapsing and unsold inventory rising. And that puts pressure on the future ownership supply pipeline in Toronto. So what does this actually mean for you? It means buyers across the board are more cautious right now. Conditions are back. Everyone, and I mean everyone, should be verifying financing, reviewing documents, and checking the numbers before committing. The market is rewarding the people who do their homework. Dufferin County saw 15 total sales in February. Average price across all types came in at $692,409. Detached led the way with 7 out of those 15 sales. Now, a quick note on reading these numbers. We're a smaller market, so 1 or 2 high or low sales can move the average meaningfully month to month. What the data is consistently telling us, though, is that detached homes are still attracting real buyer interest. The buyers are there, but they're focused on value and they're actively negotiating. This brings us to Orangeville, where the negotiation story is the loudest. In Orangeville, there was 52 new listings and 16 sales. 7 months of inventory sits on the market right now. That's Orangeville in February. And those 3 numbers together paint a very specific picture. Days on market is sitting at around 63, and the median sold price is at around $709,000, roughly $25,000 below asking price at the median. Here's what that $25,000 gap is really telling you. Home priced above today's market aren't just sitting quietly. They're building toward a larger discount. The seller who prices to current comps from day one pull in their strongest buyers early, before the listing starts to feel stale. The ones who test the market first end up proving the point the hard way. Buyers in Orangeville right now use this leverage, not just on price, but on terms, inspection conditions, finance conditions, closing dates that actually work for you. These details have real dollar value. So how does this translate for you? Buyers, you have time and negotiating power in most segments right now, especially where inventory is high. Use it strategically. Strong deposit, clear conditions, thorough due diligence. And if you're looking at rural properties, ask about the well, the septic, and water quality upfront. Don't let those become surprises after the fact. Sellers, buyers are quick to hesitate when anything feels uncertain. Your job is to remove that hesitation before it starts. Receipts for the work done, permits for any work done, strong prep. The homes winning right now are the ones that look like the obvious, easy choice in the price range, especially in the first week or two on the market. Investors, 2026 is a year for conservative underwriting. CMHC and the Bank of Canada have both flagged pressure in the condo pipeline. Don't build your plan around fast appreciation. Make sure that the deal works with realistic timelines and conservative assumptions, because the exit strategy may take longer than you want. That's your March 2026 market update. Download the slides or book a quick 15-minute call with me using the links in the description below. I'm happy to walk through what this means specifically for your situation or even your neighborhood. And if this video gives you clarity, subscribe and turn on the notifications. I do this every month so you're never left guessing where the market stands. I'll see you soon.